Awesome. Well, thank you all that have joined us here. Um, Welcome to our monthly Meet the VC event. Today we are going to have Jamie Hanson from PAX Momentum kind of walk through his day-to-day, sort of the insights of what it is like to be on a VC firm there. But before we get started from that point, I wanted to kind of first introduce ourselves here at Escalon. So we're an outsourced finance accounting firm, help with essential business services as well. So we help on our HR operations as well. But we mainly do a lot of day-to-day finance, accounting, CFO, and tax structural, and help out with your day-to-day back-end finances until once you're ready. But our first sponsor that I'd like to thank and have him speak a little bit about what's going on is actually an up and comer and really kind of growing big in the space. Al Guerrero from Stifel Bank. Thank you for having us, Al.
Hi, everyone. Thanks for having me and appreciate Escalon. You guys have been great partners to us, and so appreciate the opportunity to chat for a few seconds here. So who is Stifel? Stifel's a 130-year-old financial institution that recently hired 35 SVBers to really scale up our venture banking practice. And so I am one of those 35. I used to lead the LA practice, and now I lead it for Stifel, all of SoCal, actually. And so Stifel's venture banking practice, we're a full-service commercial bank working with VC-backed companies, and we offer the following things and kind of how we differentiate. I would think about it the following way. One of them, we provide nimble, high-touch service with a dedicated relationship manager to support all your needs and provide advice as needed through your founder journey. Second thing is, if you're a seed or a Series A company, you qualify for our startup bundle, which is free banking and a 5.28% yield on a FDIC insured product, which is really good. Third thing is we are active lenders. We've been at it for 6 months again here on the West Coast for Stifel. We've issued over 150 term sheets in 100 days. So very active in venture debt and lines of credit. And lastly, I would say Stifel, there's other parts of Stifel beyond the commercial bank. We have an investment bank and a wealth management firm. And those are very helpful for companies throughout their founder journey and their startup journey. So we believe we have the right platform to support companies, not just today, but also through the future. And then the last thing I would say is we're active in the community, kind of like what Greg is saying. I think we've done 14 events in 6 months in LA. And so active in trying to support the founder community and trying to, and the venture capital community as well, and trying to build community and trying to help with the networking events. Anybody who's interested can ping me on LinkedIn, and happy to chat further.
Thank you for that. And actually, to sort of piggyback a little bit on that, we're going to put Al and the rest of our sponsors' LinkedIn into the chat for you guys to connect with them if you have any questions from that way. We're also happy to connect you over email if need so through there. The next sponsor we do have is Travis Schetz of Wilson Sonsini.
Yeah. Hey. Greg and Mike and to Escalon team, thanks as well for putting everybody together. Always great to interact with the community. For those of you who are not familiar, Wilson Sonsini is a law firm. We're born from the Valley, and we focus entirely on tech company and life science representation. Some good examples of that are Google, who we took public back in the day and continue to represent on various matters, and Twitter, who we also took public and more recently represented in their sale. And my practice in particular is focused on all private company representation, and so I spend about 50% of that time working with just companies, and that's anyone from the very beginning of their life cycle with an idea and no cash, all the way to unicorns with multi-billion-dollar valuations and huge teams. And then about the other 50% of my time is actually spent working with venture capitalists who are investing in those companies. So I get to see both sides of that kind of relationship, and I like to think that one side helps inform the other. So I really like my job, and I like working with people like you in the community. So always here and would love to hear from anyone.
Glad to have you, Travis. And then lastly, Martina Chavez Young of Rippling. Thank you for being here.
Thanks so much for the invitation and great to be here. So I am Martina Chavez Young. I have been at Rippling for about 4 years now. I'm one of the senior channel account executives working with the Escalon team from the partnership side of things. And for anyone who is not familiar with Rippling, we are essentially a workforce management platform. We give businesses the ability to manage all of their HR, IT, finance operations all in one unified experience. So this really allows businesses to scale from the 2-founder, startup stage all the way through 1,000+ employees. So Rippling ourselves, we've been on our own platform and have that same story in our journey. We're based in San Francisco, California. Just from like the funding side of things, we've now raised over $700 million from top investors like Kleiner Perkins, Founders Fund, Sequoia, Bedrock, and we are rated the #1 fastest growing private company in the Bay Area by San Francisco Business Times. So excited to share our story and hear more from Jamie today too.
Thank you so much. Again, I really appreciate you being here. And then before I get right into you, just a quick last thing. There is a Q&A box. So as you guys have questions, as things are going on, I'll be tracking it. Mike, who's supporting me on the Escalon side here, is also be tracking it. So happy to, help you along the way. So feel free to, throw those in there. And by the end of it, we'll definitely take a little bit more of your questions, so that way Jamie doesn't have to listen to my harping this whole time. So Jamie, again, thank you for taking the time here. Would love a quick introduction if you guys could if you could provide a quick overview of PAX Momentum and sort of the areas that you invest in, things that you provide. Would love to hear sort of the overview of you guys.
Yeah, awesome. Well, yeah, thanks Greg and Escalon for hosting and for all the sponsors. So yeah, I'm Jamie Hanson. I'm a senior associate with PAX Momentum. We're a pre-seed and seed venture capital firm. We have a unique focus on B2B sales training. That's kind of our key differentiator. We invest in B2B SaaS. We also have a 30% focus in climate tech. We're investing right now. We're fundraising. And so far, we've made 57 investments through our venture partners. We invest a few million dollars per year, and looking to scale that up in 2024 as we close our fund.
Awesome. And any specific sort of companies that you guys really dive into, or anybody that's more specific for you guys, like what's the industries that you're really focused through?
So we're a very opportunistic and diversified fund. So really our only criteria that we usually put is B2B SaaS, and even that is pretty flexible. Some of our climate tech deals will have a hardware component. It might be hardware enabled software, but we'll run the gamut on any kind of industry within B2B technology.
Awesome. And then just kind of going quickly, sort of through the history of you guys. You are a family-run firm, as I know, but you guys also founded the company out in 2020. So 2020 is almost a 4-letter word. Actually, it's a 4-letter number, right? So, but it's the time of the darkest days of this country and kind of almost the world of recent memory. But you guys decided, hey, everybody's down in the dumps here. Let's start this venture fund. Could you sort of take me through what your father thought of in regards to starting this up, and sort of the area that you guys wanted to do to kind of re-inject sort of life into the tech world?
Yeah, absolutely. So yeah, it was PAX was founded back in 2020. My dad was one of the managing partners, also co-founders with my brothers, and then another woman named Elizabeth, who's not related. So the world was definitely a very dark place in 2020. But the venture world was alive and thriving, as many will remember. It was money was growing on trees back in 2020. So for founders at least, and we weren't the only venture fund to launch during that period. Since then, it's been a roller coaster in the last few years in the market for venture capital. I'd say recently, I think it's more, the market has slowed down. Founders are having a much harder time with the capital restraints and raising funds. And I think it kind of underlines one of the investment thesis of PAX is that, regardless of the ups and downs of the investing economy, the strong founders are always going to find ways to thrive. And they're going to find ways to raise capital and to scale revenue. And so, throughout, we've always maintained an equal amount of investments each year, and, finding those top founders that are able to stand out. And, we definitely invested a lot in 2020, and those founders raised a lot of money back then, and they're, laying low and being capital efficient now. And so it's, but yeah, regardless, I think that's always kind of been our macro view of things, is that, venture is always, there's always good ideas out there. There's always good founders, and we want to be there when they're looking to raise money.
No, absolutely. And actually, that's a great segue into sort of my next question for you. It's more of sort of a culture side of things, about the firm as well. You had mentioned sort of that area, just knowing that there's always that need for founders. But is there a set of values on more of a cultural fit that you guys look for, in founders when you're speaking with them, that you're like, okay, this is what we need into our firm, or these are the kind of people that we look to invest in?
Yeah, so you hit it on the head that founders at the early stage of venture capital, there's not a lot of tangible evidence that we can point to a lot, and so we really do place paramount importance on the strength of the founder. And it's a lot of very, intangible things that we're looking at when we're, meeting with founders and going through rounds of interviews and everything. So, from a PAX perspective, PAX, we were born in the pandemic, we're remote. And, I think that up until like last year, we were really kind of in startup mode ourselves. We're figuring out our company vision and, who we were and where we wanted to be. And I think all that has really forced us to become, we've become very process oriented. We're a small team, and each of us has to, we're results driven. We are creative problem solvers. We're proactive communicators. All these things that I think are some of the strengths that have allowed us to be successful, and had to be cohesive and kind of have that 20-year vision. And I think that those are things that we try to find in our founders. That founders need to be adaptable. They're building something, they're going to run into problems that they didn't know were there, and they need to be able to think on their feet and be problem solvers. And that vision aspect, it's right now a founder might only have 2 or 3 employees, but we always ask ourselves if this is the kind of person that can scale a company to 100 employees and 100 million plus ARR. And those things, they can be hard to suss out at those very early stages. But again, that's something that we really try to poke and prod at and figure out if these founders, have that kind of fit that we're looking for to be in kind of the PAX umbrella and, part of our ecosystem.
No, absolutely. And you had mentioned there of founders starting from scratch, so there's not much there. On a flip side for you guys, you probably have people of all shapes and sizes, especially, with the agnostic in regards to the technology side of things. Are you guys, willing to listen to people's pitches of companies that you would have never thought you may have invested in before, or something you've never even heard of? How did those sort of, conversations come about, and how do you work with those companies that maybe aren't just fitting in, the base line of AI or SaaS company, and it's just something completely outside the box? How do you approach that?
Yeah, so again, we're opportunistic, always looking to hear the next great idea, regardless if it's something that we're familiar with or not. We have a saying at PAX that we don't want to skate to where the puck is now. We want to skate to where it's going to be in 5 years. And we don't know where that's going to be, and that kind of underlines our, generalist approach, that we want to, be taking small bets in a lot of different places. So, absolutely, there, a lot of industries that I think are unloved, and, they go through cycles, and I think that regardless of kind of, where the macro trends are right now. We always want to be seeing as many opportunities as possible. And I'll get into later kind of a bit of our selection process and how we're able to leverage some of our venture partners who have a broader domain expertise than we do, and are able to help us kind of make some decisions on some of those trickier industries. But yeah, to get back to your question, absolutely, we're always open to looking at ideas.
Absolutely. And you'll always win me on hockey and Wayne Gretzky references. So you had mentioned so you guys do pre-seed and seed stage funding. I think there's so many stages of funding that it can get really confusing on how to define both of those. Could you kind of split those into two groups and figure out and tell me what is pre-seed compared to a seed stage when you guys are looking into those investments?
Yeah, I mean, it's you hit it on. It's a very loaded question, and I think 5 years ago the definitions were different than what they are now. I like to think of it in terms of risk. So venture capital obviously is a business of a lot of risk, high reward. And we think about, at the different funding stages, we like to think of some of the aspects of a business that we expect to be relatively de-risked. And I say relatively because obviously, we're never going to be totally de-risked in the investments that we make. At the pre-seed stage, we typically like to see that the technical aspects of a business are relatively de-risked, meaning that we're convinced that the idea is feasible, and that we have some proof that the technology is working, or that it's of course it's always a work in progress throughout the lifetime of a business, that they're constantly tweaking. But if what you do have a business, if your business is still in the idea phase, you're probably a better fit. Pre-seed is 0 to 8 or 10 million valuation, so it's a very wide window. But at that very early pre-seed stage, those are your incubators and early accelerators and your rich uncles and angel investors that'll take a bet on you. And your typical pre-seed investors will want to see some kind of proof of concept that your technology is going to work, and that some people want it. It's nice to have a little bit of traction, but not necessarily a need to have. And then at the seed, we typically want to see some go-to-market de-risked. And what I mean there is, you have this product, and at the pre-seed stage, you're telling us what markets are there that they're are going to want to buy your product. And at the seed stage, you want to see at least early traction, that these people are buying it, they're not churning, they're you're scaling revenue, maybe you have 100K or a few 100K ARR, and just some proof. Go to market again is a very ongoing process. We want to see at least like the early signs that there is a market for your product.
Yep, no, absolutely. And then just kind of curious, as you guys are really getting into those companies, how do you find new companies to invest in besides amazing Escalon webinars like this?
So we do a mix of outbound and inbound. I would say early off we were pretty reliant on outbound, when no one knew who PAX was. We're a small VC in Podunk, Maryland, and it took a little while for us to get on the map, and we kind of started in the mid-Atlantic region, and now we get applicants from all across the US, all across the world. So our outbound efforts have actually been really successful. I mean, we have our director of recruiting sent out an email last week, like a big email blast to thousands of entrepreneurs, and had like a 50% open rate, which is really high for a cold outreach email. And so those kinds of things, they've been working for us, and we do get some people interested in PAX that way. But I'd say most of our investments typically will come from referrals. So founders talk to each other. Our PAX founders will go through the program, they love what we do, they'll talk to their friends, and then we get a lot that'll come from referrals. And then also from VCs that we'll partner with. Either they'll invite us to co-invest on companies, or there's a company maybe they're keeping track of, they're not quite at the ARR milestone that they need to make an investment, and they say, hey, go check out this this early stage VC PAX, and they'll help you to scale your revenue, and then maybe you'll be at a right stage for us. So it comes, mixture of both, but typically our better investments are more inbound from referrals.
No, absolutely. And when you're working with those founders, is there any key points that you guys look for that you're like motivates you to be like, oh, we need to invest in this company?
You mean like the criteria that we look for with our?
Yeah, is there any key points? Yeah, that you're like, okay, here's here are the like the specific like bullets that we need to cover.
Yeah, so we have our, I'll probably dive a little bit deeper later into our selection process, but we generally kind of revolve around what we call the 5 T's. And the 5 T's are team, traction, technology, TAM, which kind of is like the market, and then terms. And we'll go through and we'll talk about each one of those. But obviously I mentioned that team is the single most important of those 5. However, the second one, and this is one that a lot of people don't expect, is the TAM, and really understanding the market. And this is one that I think that founders often really overlook on their pitches. And, I think it's a very common mistake that I see a lot of pitches where founders will focus a lot on the technology aspect, which is important. Like I said, we want to know that this technology is relatively de-risked at this point. However, I see a lot of pitches where the founder will just harp on whatever, all the technical details and this cool technology that they're building and how it, and, just the ins and outs and everything. And, they kind of make this base assumption that I know what they're talking about and that I really care, and that, that I understand the applications in the world. And, that's, as a VC, we're first investing in the founder, and then we're next, we're investing in the market. And so I think that again, I'm sure we'll harp on that a little later on, but the really drilling in on that problem solution, we like to talk about PAX like the so what. It's important what you're doing, but we want to really understand why it's important, and what major problem is your customer facing, and how is your solution going to be rainbows and butterflies for them, and really be an irresistible offer. And that's really what sells a VC more on a business opportunity.
No, absolutely. And I think it's probably a great time to start diving into a little bit about that sort of pitch life of and that decision making process for you guys. A little bit of a follow-up off of that, but can you provide an example of someone that completely hit it out of the park when it comes down to that pitch? Is there something that or have had an experience where you're like, oh wow, this person's nailed every aspect of those 5 T's that you had just mentioned?
Yeah, so I can only speak from the companies that I've so on our selection process, each of the team members are we're kind of assigned different companies as we get to the very final stages of due diligence. And we dive a little deeper, and so I have a more of a narrow view on just the ones that I've looked at. But just in this one that we invested in just a few months ago is called Intros AI, and not really the typical PAX mold in a lot of ways. They have more of a product-led growth strategy as opposed to a sales-led growth strategy. We run a sales program, and so we really like companies that are nailing down their sales process. And I think Intros was different in that way, that almost all of their all their revenue, which was pretty significant at the point that we invested, had come from inbound free trials, people just converting onto their platform, and very little of like the outbound sales. And we I think there were a few points that were kind of holdups for us on Intros. The CEO is the youngest CEO that we've ever invested in, and so that kind of that first point of we want to invest in good founders. He had a really strong CTO that was ex Goldman Sachs, and a strong technical background. And the CEO, he was just young. He hadn't even finished college yet, and it was that was a big holdup for us. But even the bigger one was just their product market fit. That I guess kind of big picture, I think that VCs, we kind of see startups in 2 different ways, as one of 2 options. One, is kind of the more top down, is that they have developed some technology and they're out there in the market looking for a solution to apply it to. And then the second one is that, you know, they have seen some problem in the market, you know, they've experienced it firsthand, or they've, you know, whatever way, and then they, you know, they see that there's no good solution for it and they go about to build that solution. And investors typically prefer the second one, you know, the kind of the more bottom up of like seeing a problem and finding a solution. And Intros AI was definitely in that first category of, you know, they came up with this awesome product, and, you know, it was, I mean, the back end was really impressive, and they were using AI in this really cool way. And I think a lot of AI startups fall into this category of just like this really cool technology looking for a problem to solve. And, you know, for, you know, they hadn't really discovered who their customer was yet. And so that was kind of a big holdup for us. And, but, you know, the CEO, David, was, you know, just the whole process, you know, I was peppering him with questions throughout, you know, several weeks, like back and forth email. He's very responsive, which is a huge green flag, is, you know, just being very open and communicative and honest, you know, and, you know, and he was kind of giving us examples of how, yeah, you know, you're right that we haven't really found our exact market fit yet. However, you know, we've identified this early segment that we're really, you know, we're making a big push on, and, you know, we're having good success here. And we see this as like the next phase. And, you know, but just very good at communicating that vision of, you know, who was most going to benefit from his product in the short run, and kind of, you know, scaling in the long run, you know, where it could go. And, you know, for me, I mean, you know, that was just a huge selling point. And I think it really helped us like articulate the story and, you know, sell it to our investors. And, you know, they were like a very easy decision for us at that point.
Awesome. And then just quickly on the flip side of it, can you give me an example of one that maybe could have had some better prep, or you know, just more or less find a didn't go as well, is probably the best way to say it. Is there an example of maybe there's somebody that you probably sent back to the drawing board, and have them come back at a later time when they're a little bit more prepared?
Yeah, I'll keep picking on AI companies. We had one of this last one, and I was actually pretty involved in this one. It's a little embarrassing for me, but you know, at our very first round, you know, we read pitch decks, we read applications, and I came across this one, and I'm not going to name any names here, of course, but it was this company. They were AI, and, you know, they were talking, you know, the whole pitch was just bragging about their awesome technology. And, you know, the founder, I looked at him, you know, on LinkedIn. He has, you know, 20,000 followers. He wrote a book on AI, and, you know, he seemed like someone who knew what he was doing. And one of my coworkers, Elizabeth, who's sometimes kind of like the yin to my yang and the selection process, and, you know, balances me out, was the whole time she was saying, you know, this isn't real, you know, this is a terrible idea. You know, he has no market, all these things. And, you know, I really wanted to meet with them and see him. And sure enough, you know, we went through the pitch. And, you know, maybe it was an impressive product, you know, I mean, I think that sometimes founders think that we understand more about their product than we really do. But, you know, he was just, getting very deep in the weeds, but never was able to tell us what it was going to be used for, you know, what glaring problem he was solving. And we kind of pressed him on it. And, you know, he was, oh, you know, investment banks can use this, or Fortune 500 companies, and, you know, just every you know, basically any business he thought could, you know, benefit from his product. And yeah, and, you know, he was, you know, kind of came off a little arrogant, and we tried to ask his CTO questions, and he would just cut in and answer for her. And it was yeah, just in every way, just a very poor pitch.
No, absolutely. And I think even a little bit on that, as he's just said, a lot of that keyword there is could, right? And not need. So it's just definitely finding that right decision to make it figure out where that solution kind of comes from in that product market fit, which is going back to your 5 T's there again. I think it won't be the last time that we do that. But going into that sort of final decision making process, just as you had explained there, who's part of that? You had just mentioned, you know, the yin to your yang with Elizabeth, but just anybody else on the team, how does that look like once you're in that final bit of selection there?
Yeah, so at PAX, you know, we all have our own kind of like, you know, individual responsibilities. So, you know, I'm I do investor relations. That's kind of my main gig. However, when it is time for due diligence, our selection, it's all hands on deck, and all of us are rifling through pitch decks and applications and financials, and just the kind of the traditional VC diligence roles. And so that so all of us at the beginning, and it's kind of a funnel, so we start off, and every year we'll get over 1,000 applications or people who are interested in an investment from PAX. And so it is a bit of a process. We'll go through and read every single one of them, and we'll start narrowing down, and we'll get pretty quickly we can get down like top 50. And as we go through further along the pipeline, we'll get a little more stringent, and we'll request data rooms and historical financials and background checks and customer references, and you name it. And at the very end of the stage of the selection process is we have these pitches with our venture partners. So they're a crucial part of the PAX decision process. It's a network of 30 plus investment professionals. They come from a wide background of different industries and experiences. Most are angel investors and other ventures, and know what they're looking for. And we'll put the companies, we'll typically choose like 15 or 20 finalists, and we'll put them in front of our PAX venture partners, and they'll help us to inform our decision. Ultimately, it comes down to the PAX team to make the final decisions, but we rely, heavily on the insights from the PAX venture partners. And among the team, our managing director, Matt, has, I would say, weighted decision making, but he's been overruled before, and I think that ultimately we make decisions as a team.
Awesome. Just a couple more before we get into the questions from the audience. I appreciate you guys doing that. Feel free to keep filling them in. Happy to take as many as we can here, but we're actually doing really well on time. But I would love to kind of gain a little bit further understanding of, the value add of you guys. So I think you've mentioned, that huge asset of your firm is the investor relationship, helping the founder, through the B2B process. Could you provide a few examples on how you guys have been able to do that, and be able to kind of support your founders just beyond, hey, here's some money? What does that, investor founder relationship really look like beyond just the investment side of things?
Mm-hmm. Yeah, we try to be a very hands-on, at least we consider ourselves a utility VC, as opposed to like a full stack VC. So we're not taking board seats. We're not going to be there from founding to IPO. We typically don't follow on. We have the few things that we do, and we do them very well. And the B2B sales is really the crux of all that. That's kind of what we're known for. Sales are hard, and they're hard for big corporations, and they're especially hard for startup founders, and founders are, wearing 10 hats at once, and they're fundraising, and they're building their product and all these things. And sales is, one that gets neglected, I think, and is also, one of those things that it's a skill, and I think it's harder than founders. The founder-led selling is it's a grind, and it can be pretty brutal. And so, where were we coming at PAX? We launched in 2020 kind of with the thesis that, we think that this could be a good value add. And, since then it's, been a huge success, and we've really think that we've found a significant need in the market. And so, we have our B2B sales program. It runs 8 weeks. It's in the evening. It is very tactical and hands-on. We want to help founders create a repeatable, scalable sales process. It helps to uncover just having this very critical lens for product market fit, and really understanding what your customers' needs are, and how to communicate the value that your product is adding. And one of the ways that we do, we do a very structured sales talk, and it's one of the first things that we do. We spend a good chunk of the program doing it. And there's always, I think, a little grumbling at first from the founders that we go in, and it's just like this very formulaic way of having a sales discussion. And, we have a saying, we say, trust the process. And that's one thing that founders have always come away saying that was one of the most beneficial parts of the program is, it's easy to go into sales discussions and having an idea of what you're going to say. But, in the words of Mike Tyson, everyone has a plan until they get punched in the face. And I think that sales are kind of like that as well, where it's having just like this very structured way to go about it really gives, founders this, this process that they can, both for themselves and also being able to unpack and to, pass on to the sales team, as they continue to grow and hire sales reps and all these things. And it kind of gives them a way that they can scale it rapidly.
No, absolutely. Any sort of examples or, companies that you've worked with? And I know you had mentioned just more or less that 8-week program, but any sort of success story, through those programs that you've had?
Yeah. So, I mean, we definitely have many examples of companies that, you look at their revenue pre and post PAX and, we seem to be, there's an inflection point. I don't know how much we can take credit for that. I'm sure we like to think that there's 3 kinds of founders. There's the startups that are going to succeed no matter what, whether or not PAX is helping them. They're the kinds that are going to fail no matter what, whether, regardless of how we help them. And then there's this middle area of kind of like the marginal, startups that, there's, a tipping point. They're kind of right there on the tipping point, and they could succeed and they could fail. And we want to be able to help the ones that, are kind of in that gray area to help them to succeed. To think of, I can think of a few. Jotful is one we invested in 2022. Really strong founder with a PhD and an awesome product. And after, and she always cites PAX as kind of the turning point for them, and how, they're right now, multiplying sales. And we'll dig in a little more in a second here on PAX Plexus, which is kind of another one of our value adds in helping to connect with downstream investors. And we through our network, we have one company, Lily R&B, that through one of our networks, she got the first institutional check from the Serena Williams Fund just recently, and that was through someone in our network. And we've helped other founders locate some seed investors and Series A. And so we do what we can to continue to engage our community. And we have Slack channels, and we do webinars, and every 6 months we have a live event called PAXapalooza, and it's always a lot of fun. And our next one's actually in New York and later this month, and we'll get together like half of our portfolio companies and a lot of the VCs from whatever region we're in. So our last one was Chicago, this one's New York, and they'll come out and we'll do like speed meets and stuff and do what we can to engage them. So things like that we'll try to add value as they go on.
Awesome. And I'll throw this as the last question before we start getting into a couple of the questions from the audience. You had slightly mentioned it there, but how do you help your early stage founders that you guys invest with kind of graduate from those pre-seed to seed that we had spoken about earlier to that Series A that they're maybe beyond the PAX umbrella? How do you get them from your area to that next drop?
So so we call it PAX Plexus is kind of our system. I think a lot of VCs claim to help with follow-on investing. However, I think it's pretty rare for them to have like a very standardized, streamlined process for doing it. And that's one of the things that we've worked on a lot at PAX. We build a network of follow-on investors. We talk to them, we have them fill out a form that kind of specifies their criteria and things like that. And then we actually just had one today, actually, a virtual like speed meet with the founders, and we'll connect them with investors. And investors are eager to meet early stage companies. And so it's an easy decision for them, and our founders love it. So it's, we kind of create, PAX kind of sits in the middle, and we kind of created a platform for bringing those people together. And so, that's one of the ways that we, try to nurture and help them to get to Series A.
No, absolutely. Just quickly going to jump into a couple of these questions from the audience. So Joe Wheeler had asked, what is the focus on your climate investments that you had spoken about a little bit earlier?
Yeah, great question. Just like, our overall strategy, it is very generalist. And, we, climate tech is kind of defined as anyone that's having a positive impact on, CO2 emissions and, greenhouse gas emissions and however that looks. And so we invest, right now we invested in one called Aqua Real Time that, has hardware devices for water contamination and in reservoirs and lakes. We've invested in some that are almost pure hardware, some that are, supply chain logistics and, sourcing, good renewables, what's the word I'm looking for? Yeah, just
Energy.
Renewable sources. Yeah, things for in the supply chain. And, so whatever your, climate tech, we weigh pretty heavily. I guess that is one that we want to continue to invest in. And, we're pretty flexible. Hardware, software, we'll take a look at it.
Awesome. Just out of curiosity, do you invest in Canadian companies or is it just US based?
Yeah, Canadian as well. We have a couple out of Toronto, and I think we've invested in one from Vancouver. We don't speak French, so if you're Quebec, hopefully you speak English as well. But yeah, we definitely have a lot of Canadian companies in our portfolio.
Awesome. And then Ben Negrani had asked, what are trends that VCs like yourself and others are seeing are coming into the next 12 to 24 months? So is there verticals that you see a strong uptick? Do you see AI falling apart? Or is there any things that you kind of sort of see coming across the horizon as you guys are moving towards that?
Yeah, I mean, so I guess kind of like big macro trends, I remain optimistic about the venture market. I mean, it's been a bleak 12 months, as many can attest. And VCs, we have a lot of FOMO, and I think that as soon as the floodgates start to open for as capital starts to ease up a little bit, I think that a lot of these VCs that have been holding on to cash, they have a lot of dry powder that they need to spend. That's how their fund works. They have a deployment phase and they have to be deploying. And I think that they're all waiting. And as soon as the floodgates open, I think that it's not going to be back at 2021. Hopefully, I mean, that'd be nice for founders, but not so good for investors. But hopefully it'll be kind of a good balance in between the two. As far as specific industries, I we love AI. I think there's always a bit of a bubble around these, big trends. And I think that AI is still a ways off from being, this ubiquitous force that, changes the way that everything is done. And it's, it's starting to work in that direction. I think for now, we see a lot of these point solutions, in companies that can use it for, using the prediction models and, informing, better decisions. And, I think a lot of the early winners in AI are going to come out of that. And, industries like healthcare, pharma, fintech, cyber, some of these kind of trickier industries that, use a lot of data. But, I think it's impossible for me to say what industries I think are going to be good in a few years. And, that's why we try to invest in as, wide of a swath as we can, because we don't know where those winners are going to be, but we want to at least have a part in it.
Absolutely. To piggyback a little bit on that, and the reason I asked Ben's question, which thank you, Ben, I really appreciate it, is because my question for you was sort of, what is the goals for PAX for the next 12 to 18 months? I know you had just mentioned there's a couple things that you're looking into, maybe break into a couple different industries, markets, but what's on the horizon for you guys specifically? Is there any goals that you guys are looking to accomplish, as you guys grow as a business?
Yeah, so we are right now in the middle of our fundraising, and that's kind of the big push. That is that we're anticipating probably in the next year is when we'll close our fund. And that'll change a couple things. First, it really won't change too much of our thesis. We're still a B2B SaaS generalist investors. We'll still target 30% climate tech. We will be writing bigger checks. So right now we're writing 100,000. We take a lot of little bets right now, and we'll continue to take more, lots of smaller bets, but we'll just write bigger checks, more like 250K. And right now we're investing in typically 16 to 20 companies per year. Starting in 2024, we'll start to ramp it up to more like 30. And by 2025 and beyond, we're hoping to do 50 companies a year, which I think is very very feasible for us, given the amount of application companies that we look at. Right now we just need the capital for that. But that's kind of the big focus. And I'm sure there'll be lots of other little things, and maybe we'll venture a little bit even earlier stage, like the really early pre-seed, that idea phase. We'll probably be able to take more gambles like that, and more follow-on investing as well as our companies mature to seed and Series A.
Awesome. And then I was asked just quickly how to find investors in the consumer product space. So one of our listeners here has a consumer-facing generative AI product, and just more or less trying to figure out how to break into getting in front of those investors. What any suggestions or any sort of course of action to get to help them out?
This is with investors that'll invest in consumer products.
Yep. How to find them? What's the best course way to through it? Do you have your own sort of network? I know we are ourselves at Escalon actually has some as well, so we'll probably be reaching out to them through there. But just kind of curious if you have any certain roadmaps that maybe help out founders who are kind of lost just getting to that first step going forward.
Yeah, that's a tough one. I mean, we don't really look at B2C. We do look at B2B2C if that's a, something that's possible for this listener's question is, I think B2B is always easier channel to sell into. And, we don't really understand the nuances of B2C. And so we don't really mess around with it. I would say, B2C is stronger in the West Coast. And so, I think California has probably the highest, they have the highest concentration of venture in general, but even higher in terms of B2C. They seem that, there's a lot of, VCs out there that'll focus on consumer products. But yeah, beyond that, it's, hitting the pavement and, getting in front of as many investors as possible, and, just warm intros and work in your network. Kind of the traditional, the ways that you find any kind of investor. I'm sure the same applies for B2C investors, but yeah, beyond that, I don't think I can give too much insight there.
No worries. Just two last questions for you, and then we'll kind of let you get out of here. Really appreciate your time walking us through sort of your insights this way. This one was not more of a question, but more sort of an asking for an elaboration. If you can kind of go a little bit deeper into the venture partner program. So how do you get VCs involved in that? Adding a little bit, further into more of your, program. So how do you get more VCs outside of, your area to kind of be a part of that as you kind of help businesses grow within your own?
Yeah. So that part, it's actually not I think that part is easier. Just because when I reach out to a VC, and so each of us kind of has a different market that we focus on. I do Mountain West and West Coast, so I focus a lot on LA and Salt Lake and making connections. And typically I'll reach out to someone on LinkedIn and be like, hey, we're a pre-seed and seed investor. We have a system for connecting our companies with follow-on investors, downstream seed Series A investors. And, really, at the end of the day, VCs live and die by their deal flow. And they want to have promising, channels for looking at more companies. And so for them, it's a pretty easy decision. And so it's, usually when I ask for that, I can get, schedule a 15-minute call. It's really easy for them. They just fill out a quick form and get plugged in. And, I'm always, and this goes for VCs and founders, I'm always open to having meetings and collaborating and chatting. And so, my line's always open. But yeah, with the VCs, it's typically a pretty easy sell.
This is my last question, and I can't thank you enough. One, for your time, but also for these segues. My last question is, where can funders find you? Like, what's the best way to get in touch with you? I know the previous question there actually came from an accelerator and a fund, so I'm definitely going to try to make that connection. But as people listening here, like, what's the best way to get in touch with you guys?
Yeah, let me I can put right here my LinkedIn. Always happy to connect. Anytime someone will reach out to me with a personalized message, whether over email or LinkedIn, I will almost always respond. If it's like an email blast, I can't if I really like it, maybe I will. But if someone does reach out personally, I will definitely answer. And my email is open. I do like kind of like office hours, and happy to, even if you're not a fit for PAX, happy to chat and go over any of your B2B sales strategy and talk you through some of those challenges. And if you are invested and interested in joining PAX, again, happy to answer any questions. However, I always direct people to the front gate of PAX, which is our application process, which can be found on our webpage. There's an apply now button. It'll be like an interest form. And then, you can fill out a quick application. But yeah, open to connecting and chatting, and feel free to reach out.
Absolutely. Well, thank you so much for your time. Looking forward to hopefully getting connected in person someday down the line. Maybe when your next party is out in the Bay Area, feel free to give me a call. But I want to say thank you to PAX Momentum, Stifel Bank, Wilson Sonsini, Rippling, and everybody that came out to join us today. Much onto Jamie's side of things. If you guys just have questions or anything of that matter, happy to just connect with you guys afterwards, and get you guys to the right people. That's why we do this on a monthly basis. We'd love to see it next month as well. We do this, I believe, the second Wednesday of every month. So thank you, everybody, and I look forward to seeing you in the next one.
Thanks, Greg.
Thank you.